As the first half of 2016 ended, the economy seemed to be repeating the pattern seen in 2014 and 15. A poor first quarter giving way to a better second quarter. Monthly indicators showed improvements in consumer spending, retail sales, and manufacturing. Consumer confidence also rose. The quarter did see a decline in the pace of hiring, and the red-hot housing sector cooled a bit. Oil prices rebounded, which really helped equities. For the first time in history, a country voted to leave the European Union. News of that vote stunned financial markets worldwide in June to even a greater degree than the multiple terrorist attacks carried out by ISIS and its sympathizers. Bullish sentiment ultimately won out on Wall Street during a volatile quarter as the S&P 500 rose 1.9% in 3 months. The Federal Reserve left interest rates unchanged, which could be the case for some time. On May 27th, Federal Reserve Chair Janet Yellen reflected on the potential for an interest rate hike, commenting that, quote, probably in the coming months such a move would be appropriate, end quote. Other Fed officials were making hawkish statements of their own. At the end of the second quarter, a summer rate hike looked decidedly inappropriate. After the Brexit, traders lowered the possibility to 8% for the rest of 2016 and felt that there would be a 20% chance the Fed would make a rate cut by early 2017. While Wall Street will likely not have to worry about an interest rate hike for the rest of the year, investors and economists alike may be a bit worried about the labor market. In May, the economy added just 38,000 jobs, and the government scaled down its estimate of hiring for March and April by a combined 59,000 jobs. Both major consumer confidence indexes posted quarterly advances, while consumer spending, the great engine of the U.S. economy, suddenly revved up during the second quarter. Equities around the world had rallied immediately before the Brexit referendum in the United Kingdom, as polls indicated the Remain campaign might triumph over the Lead campaign. When the opposite occurred, global markets went haywire on June 24th. The EU now faces some unsettling questions. Will other nations now vote to leave it, following the UK's example? Will the Brexit weaken the euro? Could it destroy the economic recovery evident in Europe? If central banks act to bolster the financial markets through stimulus, will their actions amount to anything more than an economic band-aid on a political problem? Only time will answer these questions. The Thomson Reuters Core Commodity Index rose 13% in the second quarter. This tremendous benchmark gain hints at what a spectacular quarter it was for select energy and agriculture futures. Existing home sales improved in April and May, according to the National Association of Realtors. The quarter saw a wild swing in new home buying. The Census Bureau said sales were up 13% in April and down 6% in May. Mortgage rates fell in the second quarter, one factor that helped home sales even as inventory was tight. Here is where the U.S. key indices ended the second quarter. The S&P 500 gained 1.9%, the Dow was up 1.38%, and the NASDAQ lost 0.56%. After the Brexit news, is Wall Street managing to regain its footing here in the third quarter? You could argue that the third quarter could be less volatile than some analysts expect. The Brexit leaves some huge question marks for investors about the UK economy, the EU economy, and the global economy, but the answers may take years to emerge. In the near term, what seems almost certain is that the Federal Reserve will avoid raising interest rates. That alone may breed a little bullishness and lead investors to refocus on corporate profits and earnings guidance. Will the next earnings seasons be slightly better than expected? Will we see some earnings growth again in the third quarter? No, the U.S. economy cannot divorce itself from the effects of the Brexit, but U.S. investors expect to see the federal fund rates near its historic low for some time. meaning one potentially significant headwind against stocks may have eased for 2016. That concludes our update for the second quarter. Our next video will be in October. As always, thank you for placing your trust in Life Plan Financial Group. We hope you have a great summer.